Good morning.
Morning,
Christy.
Christy.
Nice to see some familiar names. So you were in it was at Gold Coast for the event, and then next is New Zealand, correct?
Yeah, so Kerry Stevenson, she runs the big gold events, not only around Australia, but around the world. So she, rubs arms with the likes of Rick Rule, who's like a guru in this precious metal space, Robert Kiyosaki, you probably all heard that name. So she goes around and just pretty much educates people around precious metals and why it's so important, around obviously that debasement of fiat currency. Crypto is the same thing with Bitcoin, and that's why we get into that space. So just around what's happening there and just educating around that kind of stuff, really.
Beautiful, beautiful. Hello, everyone. We're just going to see if you can get Kane to join. He's just running a little bit behind. Just give it a couple of minutes, and we'll push forward. Just be in the background. Okay, it looks like Kane's joined. Dave, if you want to have a look to see if you can promote to
Okay,
panel.
there he is. Are we sure we want to promote him? All right, he's in.
Awesome. So I'm just going to share screen. Good morning, John. Hello, Kane. Just on mute, Kane.
Oh, perfect. Sorry. Going, guys.
Beautiful. So let me share my screen shortly and get into the topic for today. And yeah, look forward to it. It's going to be a good session. Okay. That should be up there and quite clear.
Yep.
Beautiful. So today we're going to be covering off a topic that is a little bit maybe on the back of everyone's mind, I guess, given the current climate and the state of the world. But I think it's something that, if done well in preparation for, I guess, positive sentiment in the market, can really hit a stride, and you can really find your feet and get ahead of the trend. So really today it's going to be the altcoin selection masterclass. We're going to be doing a series of these webinars, but I wanted to really prepare for in case there is some positive momentum in the markets, and then everyone has the right knowledge and the technical knowledge and the fundamental knowledge to make and find quality before it trends. So that's kind of the theme for today, and really looking forward to it. It's something that I am quite keen on. Was covering this, and so I'll just tick off to the next slide. As usual, I wanted to delineate between the two companies because there was a few questions there from people that weren't quite sure, maybe the differentiation or how we differ in terms of UpTrade versus MTM and mastering the markets. So just a quick note. So UpTrade, we're the expert crypto broker. We effectively enable people to apply knowledge directly, provide access to buy, sell, and swap and invest through a crypto brokerage. And we make sure that everyone gets the best in class pricing. They're supported by a dedicated broker, and there's also institutional grade research and strategy. On the MTM side, I'm sure there's a few faces here that maybe already be a part of the community, already our clients. But for those that have joined, maybe you've seen an advertisement or been a word of mouth. Mastering the Markets is our education partner. They're really focused on equipping people with the knowledge, the frameworks, and the technical understanding so they can navigate any markets. And that also includes the crypto market with confidence. But that knowledge is far and wide outside the crypto world. So I also wanted to do a quick introductions, not to bore everyone, but it'd be great to sort of know, who we are and what experience we bring to the call. So my role is I'm broker team lead at UpTrade. I lead the brokerage and institutional operations function. This is my 9th year now in cryptocurrency, so doing a lot of investing and trading and managing a few multiple market cycles. And I typically manage a lot of our high net worth clients, about 300 plus at the brokerage. Kane is our head of research and analytics at UpTrade. So formerly an analyst at Apollo Crypto. they're an institutional crypto asset manager, and also a former VC analyst at Upside Down. They're a venture capital fund. Similar years of experience there. And Dave, if you want to introduce yourself.
Yep. So David Bird, online known as ASX Trader as well, founder of Master the Markets, which is Australia's largest trading investing school now. We've had over 1,000 students go through from last year. And yeah, you may have seen some of my work featured on your, as mentioned there, News Corp, AFR, CoinMarketCap, Crypto News Australia, things like that. And I do speak at a lot of the big finance conferences around Australia. Literally just come from the big gold conference this morning here on the Gold Coast. And everything I talk about comes from the IFTA, so the International Federation of TA. So I'm a certified financial technician. So it's not stuff that I've made up in my bedroom kind of thing. It's all research-backed stuff that backs decades and decades, years of research.
Beautiful. So we do have the dream team in force. So I guess to cover off the topics for today, it's what will you learn? It's pretty much going to cover off the current cycle or the current period of 2026 is quite challenging. How do you stay ahead and find the diamonds in the rough in the altcoin market? Identifying the narratives. So what's driving, I guess, alpha and outperformance or return in the altcoin sector, if there is some to be had. Looking at our analyst research and our watch list, how does the analyst team, what does that look like? What assets are on our radar? And how do we ensure that, when we are talking about certain assets in crypto, that they are ones with strong fundamentals? And then we'll tie off with Dave covering off the technical execution. So looking at, timing some of the alts, where they're at in their journey, how they're performing against maybe the benchmark and covering off from there.
Just before you continue there, George, I just want to first of all just say congratulations for even being here today, guys. I was at a VIP event for crypto last week in Perth, and we were talking about our success stories. And I was lucky enough to buy Matic down at 0.007, which ended up being a 500x. And the part they didn't get is that when I bought that, it was when market sentiment was terrible. It was in the middle of a major bear market. It was when no one was interested in crypto. Similar to where we kind of have that sentiment now. So the fact that you guys are doing the hard yards now, you're doing the work now, you will be able to reap the rewards once the market and the cycle does turn around. So I just wanted to say well done for being here, because you're doing what most people won't do, which is doing the work during the hard times. So when the good times come, you'll be here sitting back and relaxing and thanking God that you put that work in. So well done.
Absolutely. We've all had a few success stories. One of the infamous ones that I'll mention from one of my clients was in 2021. This is something that I wish you all watching and everyone here don't do this. There was a coin titled Theta. She wrote it up 100x to $20 million of unrealized profit, and then went all the way back down. And that's probably one of the craziest success stories I've heard. And not success in the fact that it didn't sell. So the whole idea is it's one thing to identify an asset, but then how do you take advantage of it and not get emotional? So props to everyone being on this call. I think you're doing yourself a great justice. And yeah, we've got the dream team here. So let's kick off. Let's start off with a fun question in the comments, and always good to keep things a bit interesting and engaging. I want everyone to kind of just write a response in the chat on which altcoin do you think or do you expect to outperform this year? Got a few questions, a few comments coming in.
Memes.
A lot of people, there's a common theme there. Looks like a lot of link hype. Interesting. XRP, anything AI, Tau FET, hoping for XRP. A couple of memes being mentioned. Okay, there's no right or wrong answer to this. It's just wanted to get an understanding of sentiment and where people are at in terms of the community. Great. So we'll kick off with the current market outlook. So this is very important. I think, Dave, you've mentioned this numerous times, the shift to defensive mode in 2026. That theme is no exception to the crypto market and altcoins. We're seeing, of course, a lot of the geopolitical tensions and the supply shocks on oil causing inflationary pressures globally. And what's happening is a lot of people are sort of stuck like a deer in the headlight of what's going on, and there's been a flee to safety. And so that theme has come into the crypto market as well, and we've observed that actually people aren't speculating as much as they used to on altcoins, and they're focusing on, I guess, what you could call or argue defensible assets. So not playing offense this time around. But this is the interesting thing that I've realized about Bitcoin from looking at all, and this is the importance of the bottom right image, is when we had let's just reference it to the Ukraine and Russia war, or the Russian invasion of Ukraine. What you noticed is that actually we typically tend to see a sell-off initially when the event gets priced in, and then actually 2 weeks after we see a rise. So if you can see from that data around Bitcoin as a whole, typically there's been a 15% increase on this date. And then even the Iran conflict on Feb 28, we actually have seen a 12% rise. Well, obviously had a huge capitulation going into the event, but we typically do see a bit of a recovery after these key events. But what we've noticed is that overall sentiment is risk off. People are fleeing to safe haven assets. Gold, I mean, that got priced in obviously in a bit of a corrective wave at the moment. The Swiss franc, US treasuries. There are a few other currencies that people consider, during these times. I think the biggest threats at the moment are, I guess, stagnant economy with persistent inflation, and what we call stagflation, right? So typically people in the MTM community that are already part of that, I know that you guys have been kicking some serious goals, looking at the commodities market, the emerging markets or energy sectors. Is that right, Dave? There's been a lot of success in that current time. Just on mute there.
Yeah, this year's been a tough year for most. As we know, the XJO is down 10%. SP 500 Nasdaq's not as bad yet, like probably 5 to 7%. But we kind of went defensive at the end of last year and went quite aggressive in the energy sector, which has been the best performing sector this year, up 30%, whereas your info tech is down 30%. So just knowing, just like in sport, there's times to play offense, time to play defense. And like you said, there's the same thing in crypto as well. So it's just knowing when to jump between the two.
Absolutely. So in risk on environments, you do have like higher risk, high yield assets doing really well, speculative investments. We're currently not in that current period. So this is a really important theme to navigate going into the next part of the webinar. Okay. So I think whilst altcoins, and there's no denying that the altcoin market has been very, very challenging in the last few months. And people typically are trying to always outperform the benchmark and don't typically do well. I'd say 1% of altcoin investors typically do well. Very, very few. During these times, especially, there are some positive sentiments in terms of the overall, in terms of like the institutional money entering crypto. And that's why what I wanted to kind of focus on for this part of it was, if you are also going to be looking at investing in altcoins, focus on institutional money. This is a big year for institutional interest. As you know, traditional companies like superannuation funds, pension funds, 401ks, anything that's institutional money can't typically buy altcoins. Right. Eventually, they're going to have Roth IRAs in the US. There's about 11 trillion there that could enter the market, but they will likely enter through institutional vehicles like ETFs. So a big thing to keep an eye on is, which altcoins out there. Looking at, for an example, Ethereum, looking at XRP, Solana. They do have institutional flows, and looking at these points here in the graphs, you can see majority of that is actually positive flows. So that means that there's a lot more demand than selling happening on a lot of these crypto altcoins. We're actually going to see a lot more ETFs come to life in the altcoin market. There's a lot of rumors for a few more. I can't remember, Kane, if you're aware of what else is pending, but I know that we have Ethereum currently. We've got XRP ETF, we've got Solana. Kane, do you have any understanding of which rumors are around the corner?
Yeah, I mean, there was a few different ones. I believe Sui has been talked about. I know HBAR has one singular one, and I believe a few other ones like Hyperliquid have been listed as potential to get the next ones.
So what you can see from this graph here is the AUM, which is the assets under management, how much money are in these ETFs, are actually growing quite positively. XRP being one of the largest of AUMs, it's actually double Solana's. So it seems to be quite a lot of institutional interest flowing into the XRP asset. And then going into Ethereum and Solana, you can still see that that's quite positive over the longer term. So it's important to focus on where's the institutional money heading, where is all this money in traditional finance, how can it enter crypto in a regulated vehicle that they're used to and they can play in that world. They may not be speculating on meme coins, as an example, because they don't have the right to buy them. They don't have the actual regulatory clarity. And this is really important in this current cycle for altcoins because what we do know, and this is a fact, is that this is not a retail-driven market at the moment. This is currently an institutional led market cycle, and a lot of that liquidity has to come from institutions. So we need to be very careful and selective about which altcoins we're even discussing and utilizing because yeah, this is a zero-sum game. Someone else has to lose for you to win. In competitive markets like this, you need to be really ahead of the game. What I do want to focus on is narratives. So we talked about ETFs. Let's talk about narratives. Well, currently, we actually have seen in the last few days the AI narrative has resurged. We had some assets doing 70% gain in 14 days, which is a pretty significant rebound. It looks like AI could be back on the menu this time around. We saw in 2020, 24, 25 that AI, RWA meme coins, they were really hot when we were going into the Trump presidency in the election. We saw a huge rise up going into that. Now we kind of are getting into a stage where in the defensible sector or what we consider as more stronger assets, they're typically things that have real tangible value. AI, real world assets, revenue generating protocols. A lot of these are currently what we're seeing as some of the top narratives for this cycle. And as you know, it's a very important concept. You can even see here on the right, this is taken from, I believe, DeFi Llama, that memes, AI, you can see here RWA. They're some of the top narratives in that sector. Smart contracts just typically mean any kind of layer one platform. So I think that's very important to know. Moving into the current sector, we've been analyzing this at UpTrade. We've been looking at what are some of the top emerging narratives. We always have our finger on the pulse, so we know if the trend shifts, where's that money potentially likely to flow to. Very important to stay ahead of the trend. And as you know, crypto can change in the blink of an eye. It's an asset class that's 24/7. It never sleeps. You're out of date. If you take 3 months off, you feel out of date. It's actually quite funny how many people who have been in crypto for quite a while, say 2, 3, 4 years, they take a little bit of time off and they come back and they say, I've forgotten how to transfer an asset because there's so many new blockchains and it's all just changed. There's new wallets, there's new infrastructure. So it's very important to work with a team that has, the best interests and staying on top of the trends as well. One trend that I think will be here to stay, and this is something that I'm personally extremely interested in, is tokenized real world assets. In my opinion, this is a very big core function for utility in the crypto space. Is how the two TradFi, traditional finance, and crypto worlds will emerge, and there is a huge opportunity. So just looking at this screenshot, there is apparently future predictions by Standard Chartered Bank that $30 trillion will be in the market of tokenized assets by 2034. Now, crypto is 3 trillion or less actually these days in market capitalization. That's a 10x increase. Now, what that simply means is any commodity, equity, bond, I guess anything really can be tokenized and brought on into crypto. And that just creates a much more seamless, cost-effective way of transacting or trading value. So you'll be, as you've seen, there's a lot of currently, tokenized commodities you can buy. There's tokenized gold and now even silver that people have been buying. And this is a huge, huge avenue for where I think the biggest growth will come alongside institutional growth from ETFs, and also capturing, I guess, even just the real estate market. The Australian property market, for an example, is what, 13 trillion or so. Just a small percentage of that can be tokenized. I know there are some companies out there that we speak to that are tokenizing. For an example, getting ready for the Olympics in 2032, they're now doing infrastructure projects there that you can buy tokenized versions. And this is really important. But the whole theme of this is, well, what does this mean for me or for you as a viewer? That's probably what you're thinking. Now, to create value from this, effectively, you'll need to understand either which projects are pioneering in that space to know where to make potential investments, or which blockchain infrastructure, in other words, layer ones, are actually poised to capture most of this liquidity coming on the market. So we believe that there are some networks which are designed more for security, and there's others that are designed more for speed and for cost effectiveness. Kane, did you want to add any commentary around based off your speculative opinion, which chain do you think may be likely to capture? Or maybe it's not a winner takes all, maybe it's everyone wins. What are your thoughts around RWA?
Yeah, definitely. I think what the most important thing to note here is the fact that it's not just crypto native people who believe that real world assets and tokenization of financial markets is the future, because we've had the likes of Paul Atkins, we've had the likes of Larry Finks, who is the CEO of BlackRock, the biggest asset manager in the world. They're the ones who are saying that all financial markets are going to be tokenized and going on chain, because naturally the technology is far superior to what they currently have in traditional finance. So that is one thing to note. It is more or less inevitable in a lot of people's eyes. And when it comes to which chain will win, I think what you have to pay attention to mainly is where liquidity currently lies. So if we want to look at where majority of liquidity lies, it's currently on the Ethereum blockchain. It might not be the best functioning blockchain, but the fact that it does hold majority of liquidity is going to draw most of the institutions onto that chain. And we've already seen it. We've seen BlackRock build their first fund on Ethereum called Biddle. We've seen also JP Morgan launch a money fund on Ethereum as well. So they've already been choosing Ethereum as their main, chain for RWA, as well as their tokenization of funds. So I would be backing in them quite significantly to do so. The other two I would be paying attention to would be Solana, just because from a efficiency and fee side being so cheap and fast, they've also been doing a lot with tokenized stocks. And then Hyperliquid. Hyperliquid is probably the fastest mover at the moment when it comes to commodity trading as well as equity trading. So those are the three that I'm putting my money on as being, the foundation of real RWA.
Absolutely. Yep. It's definitely going to be an accelerating period where a lot of this, as you can see from this screenshot, currently US debt, there's about 8.8 billion that's already on chain. This is launched by BlackRock, who have their Biddle. It's a tokenized treasury trust fund. Effectively, you can have ownership in US treasury debt, and the tokenized version. So why are these huge companies, biggest investment managers in the world, tokenizing crypto or real world assets on crypto? It's because it's more efficient, it's cost effective, it's less I guess intrusive or invasive to move this money or transact on their networks. It's a way more seamless infrastructure, just like crypto or blockchain technologies is way more efficient than the Swift system for payments. It's it operates 24/7. The settlement's instant. It's cheap, and that's why they're all coming on chain. So I have a lot of clients who ask me, will UpTrade as a brokerage, are you going to be offering stocks or other assets? I said, well, we don't really need to. That world's coming into our world, and eventually we'll just offer the tokenized version. So we're just there waiting for this whole world to come to fruition. From the retail side, you got Robinhood. In the crypto side, you got Hyperliquid, you got Paxos, Tether Gold for tokenized gold. It's great, and it's really exciting to see where this goes. And as you said, Kane, I think Ethereum is probably one of the safest infrastructure for companies like BlackRock. That's why they've chosen Ethereum as their main chain. You have some projects that they're testing on, like Ondo, which I want to talk about in a little bit of detail because I had a client ask me recently, Ondo is a huge name in RWA. Why isn't it doing so well? And the main answer to that is because it's a governance token. It doesn't directly benefit from any revenue or fees generated from BlackRock building this treasury trust fund. They don't actually, the actual underlying asset doesn't benefit from it. If there was, for example, fee switches that was voted in the governance of the underlying protocol, that could earn money and revenue, and that can be used to either buy back Ondo as a buyback mechanism to create demand, or pass on some of that revenue back to its token holders, which, I guess you could, traditional world, Dave, would you call that, would you call that, like dividends in some respects? So yeah, we're trying to bring in the traditional concepts of what creates demand in crypto. And this is very important to know because there's so many altcoins out there, and Kane will talk about this a bit later on about the dilution in further light. So speaking about Kane, I think the last thing we'll cover off is the Clarity Act. Now, this is super important for the altcoin sector. Why? Because it will establish a precedent for how can somebody who holds stable coins earn yield, right? And that means that obviously people will flow and flock to that stable coin. But the biggest thing is once you classify whether certain altcoins are either a security or a commodity, you understand the legal treatment behind that. It then gives all the institutions the green light to start to invest through their vehicles, trillions of dollars into crypto. And it's legal, it's been ticked off. Traditionally they would use ETFs, exchange traded funds, to buy crypto, but this is going to create a world where we can finally on-ramp a lot of that, trillions of dollars that's out there. Kane, I know that maybe there was the latest update on this was around, they were sort of arguing that it couldn't be passive income. It had to be actually active participation for you to generate yield. Why is that so important, would you say?
So yeah, there's current talks around stable. This is around stable coins mainly. So basically between the big banks and Coinbase, really, they're currently in talks around how stable coins are yielding passive income, because at the moment we understand that in crypto you can actually earn a decent amount of money on your passive stable coin. So you can earn up to 10% in some protocols. Whereas in America, most banks do not offer anything near 10%. It's more or less than 1% for most banks. So the issue that currently lies is that the banks are arguing this is going to take a lot of money out of the US global financial system, as well as out of their pockets, meaning that there's chances of bank runs, things like that. And then, there is a whole big argument about how that could affect our economy even further. So that's what they're currently working through. And then from a Clarity Act point of view, I believe the SEC, so Paul Atkins just released a video recently talking about that most crypto assets are digital commodities. And more or less, that's the joint guidance that they've had with the CFTC, that kind of already establishes the fact that we are going to likely be seen as a digital commodity asset class.
Beautiful. I think that is a good segue into your section, Kane, if you want to take it away.
Yeah, for sure. So I just wanted to zoom out a little bit and look at the last three cycles, because altcoins have had very different performances in each one. And it kind of will help us gauge why we didn't have that run in 2025. A lot of people did predict. So if we look at 2017, this was the ICO age, is basically where every single asset pumped. There was about 200 meaningful tokens. There was obviously more, but 200 that actually were trading at decent valuations. We had the ICO mania, which was complete speculation. This was fully retail driven. There was barely any institutional interest, if any, at the time. There was no real funds that were created. Most funds in crypto were created in 2018. So yeah, that was a time where Bitcoin dominance, because Bitcoin was the main asset at the time. It basically fell from 60% all the way down to 35%. And this is our first ever real altcoin run we had. So the reason why I want to bring this up is because we did have extremely low valuations for these tokens. So it was easy to pump these. This is why we saw the gains of 50, 100x gains for a lot of those tokens. Basically, any token you wanted to pick, you basically won. You didn't have to rely on any fundamental understanding. You didn't have to rely on the utility. It was pure speculation, and everything was running. So that was 2017. 2021 became a little bit more I would say traditional in the way that assets were less speculative, but still in the same sentence, they were very speculative. Speculative. So conditions were very perfect in 2021 in the sense that we had basically zero interest rates. There was still only a few thousand tokens. We were having the stimulus checks handed to people, so their disposable income was a lot higher. And as George mentioned earlier, altcoins are retail assets. Institutions had no part in altcoins back then because naturally the risk factor was completely out of out of the equation for them. So they weren't actually participating. It was the retail. So we had the DeFi and NFT boom. This is really important. So when we have different sectors begin to boom, like the NFT and DeFi, that attracts retail investors because they see the extraordinary gains coming into the sector or into this asset class. And because of the psychological minds of a lot of people, when they see these gains, a lot of them start to flock in. And that's why we did see so many more participants with meme coins in 2024, a very similar situation. But we did start to have our first signs of institutional interest, I would say, with Bitcoin. We saw the likes of Tesla buying. We saw Elon Musk talking a bit more highly about Bitcoin. So that was a start going into our next cycle. And 2025 was what I call the great filter, because you look today, we've got 35 million tokens launched, maybe 37. But the issue we currently have is that rates are still extremely high in the US, above 3.5%. We also have very sticky inflation, as George said, above 2.4%. And speculation is no longer enough for people to want to buy an asset. So utility has become extremely important today. And that's why institutions who have been focusing on Bitcoin and the likes of the ETF products, if they are to get involved with altcoins, they have to have utility and they have to have some sort of real cash flow or real revenue engine so they can underwrite these types of assets in a traditional way. So I guess that moves on to the next slide, which is around why altcoins didn't run in 2025. So this was extremely disappointing to a lot of people who had the 4-year cycle planned out, who understood the fact that in previous cycles it went to Bitcoin, it funneled down to Ethereum, and then it funneled down to altcoins that exploded and everyone made life-changing money. So it was very disappointing for a lot of people, and I guess it comes back to why it was the fact that retail were not participating. So again, risk on, it was a very risk off time. Obviously, the macro environment was just non-favorable for any type of risk on asset. We also had the geopolitical tension, so a flight to safety assets. Gold did extremely well. Silver did extremely well. That automatically kind of pushed the likes of speculative assets like altcoins out of the picture in 2025. And there's also no real FOMO catalyst, which is kind of what I was speaking about before with the NFTs and meme coins. Meme coins did well in 2024, but it didn't really carry into 2025 too much. So retail participation started to die out, and we started to see less interest in actual digital assets. And then if you look at the institutional side, we have to look at where money was actually going. And this is what George again said. Institutions have led this cycle in terms of money and capital input. So we saw they were basically only allocating to regulatory assets or anything with regulatory framework, which were the ETFs. So Bitcoin, Ethereum, we saw XRP and Solana also kicking off as well later in 2025. And then the only other ones were cash flow generating protocols. So this is the narrative that I've been extremely bullish on, basically for the last year and a half now, is that we are, as our asset class matures, we transition into a point where cash flow becomes extremely important for institutions. And if you want to be in an asset class that is going to have sustained life and that is going to grow significantly, you naturally need to have institutions as well as retail participation. So when it comes to them, they're looking for ways to underwrite in a traditional way these protocols in terms of valuation metrics and things like that. So token dilution, I just want to quickly cover this off, why this also was a killer in 2024 and 2025. So token count actually surpassed 37.8 million tokens just recently. So in comparison, like as I said, 2017 there was about 200, and 2021 there was maybe a few thousand. So we're at $37.8 million. And this is due to the launchpad I guess narrative that went off in 2024 and 2025, and this was led by the likes of Pump Fund. Meme coins were majority of these actual token launches, where basically it became very easy for anyone to launch a token. Naturally, a lot of people start to lose interest in old things. This is just a psychological thing. When a new shiny object comes your way, your attention starts to get shifted. And this is what kind of killed a lot of previous tokens, like the previous cycle tokens. They didn't perform near as well as they should have because there was so many new tokens being launched every day. Everyone's attention was scattered as well as liquidity. So yeah, a lot of liquidity got pushed and thinly spread across a lot of assets. And naturally, only the best assets, the ones who had real revenue and actual utility, were the ones who could sustain the life cycle in that 2025 period.
So it seems like, yeah, revenue generating protocols is the trend from some of our research, and it makes sense, right? In high interest debt environments where debt's so costly, people don't really want to rely on debt to scale. They want to have, cash flow or revenue to sustain them, just like you would in traditional stock market. So that's what we're seeing. We're seeing companies that are cash rich, cash flow positive, really succeeding and thriving. And a lot of the speculation has just fallen off the cliff. So yeah, that's a really important note there.
Amazing. So just quickly going into the narratives and metric identification, how do you spot the winners before they run? This is a very basic understanding of it, but it will help you significantly in where you need to start looking if you want to see ways narratives move, as well as how tokens accrue value. So what to look for in tokens, as I said early, real on-chain revenue and fees is really important for a lot of projects. The likes of different layer ones like Ethereum, Solana, things like that, probably less important because naturally their utility is as a gas token, so it is a little bit different. But most tokens need to have some sort of revenue coming in to sustain their token. Number two is identify value accrual mechanisms. So just because the token might have revenue doesn't mean that revenue is being distributed back to the token or used to sustain the token, sorry. So you actually have to understand why your token you're buying is going to go up. For example, George, you mentioned Ondo. Ondo is a governance token. So you're speculating on the fact that the governance right or voting rights of this token is enough for people to want to buy this, and this token's going to accrue in value, which is a very speculative view on a token. It doesn't really hold much merit, and naturally, if they do decide to change that and go into a way where they do the fee switch, as you said, George, that's when you can start to hold more of a reasonable valuation on these types of assets. Other things quickly, growth in core metrics. You can see user growth, you can see transactions, you can see total value locked. These are very readily available on sites like DeFi Llama, and you can verify how they're growing over time. And you can also look at who's building positions. So looking at different funds, looking at different DAOs, looking at the DATs, which are the digital asset treasuries. The ones who are sophisticated and the ones who have really strong returns year after year, if they're allocating into certain assets, there's reasons they are doing so. So being able to follow those big plays is really important. And then narrative signals. This is again following on to the previous thing around DeFi, NFTs, meme coins. Money follows stories. So every cycle has had a pretty dominant narrative. 2017 ICOs, 2021 NFTs and DeFi. 2025 was you could argue the meme coins, despite them being short-lived. So being able to understand and follow those stories, looking at dominant positions in fast-growing ecosystems like Solana, Ethereum, and more or less, yeah, following the smart money. So the ones that have strong teams, the VC backing, this is going to help you identify the real winners.
Can we just stop there and talk about a little bit about Morpho, which we obviously spend, the team at UpTrade spend probably 200 hours a week in research, understanding all of this TVL metrics and growth metrics. And one of the things we found out was we saw an asset called Morpho, which we posted about actually in the Academy of MTM. What we saw was, and Kane, correct me if I'm wrong, but there was a huge amount of capital that was, maybe billions of dollars that was there in the ecosystem, and there were maybe rumors or speculation about them turning on fee switching or revenue generating, which would make them become a revenue generating protocol. So do you mind just telling a little bit about that story?
Yeah, for sure. So basically for Morpho, again, we look at all the on-chain metrics daily. So looking at things like the TVL, looking at the volume, looking at the active users, they were growing considerably despite the bearish market conditions. And we also noted that Aave, who were probably one of the bigger competitors to Morpho, was going in a period where they were losing a lot of faith from their loyal users. And naturally, the fee switch situation that you were talking about, George, was a speculated thing that they were going to turn on. So that's why we took the position. Everything from a fundamental point of view looked very strong for Morpho, and naturally, it became a really good trade in the end.
Absolutely. So that's something that I shared with, once we saw all the green lights and the ticks for all the metrics we looked at, it came on our radar. I shared it with Dave, and then funnily enough, the technicals also checked out as well. And it was great to see that alignment there. But yeah, I don't want to steal Dave's thunder. I'm sure you'll cover that off.
Perfect. Well, I'm just going to quickly pump through a few different assets, kind of talk about the utility and why these hold value and why these can do extremely well in the next cycle of altcoins. So basically, let's start with Ethereum, the base layer of everything which is being built on. So all the protocols currently, you think of Aave, you think of Maker, you think of basically all of them, Uniswap, they all build on Ethereum at the moment. So this is the foundation layer, and that's why it's called a layer one. It currently has $55 billion in total value locked. I just saw a comment, someone asking, what total value locked is. It's basically the amount of liquidity that is circulating around an ecosystem or project. So if you have 55 billion, it means that naturally every project that is on Ethereum, if you collect the total amount of money, it equates to $55 billion, which is a large sum of money. I think it's about 60% of the total. So it's a number one smart contract chain, 100% of supply is circulating, meaning there's no actual emissions. It all depends on the demand on the actual usage of the chain. And then we've got 200,000 daily active addresses, which at its highs, it reaches up to 2 million. So a few things you can quickly read on here, but you can see that the supply contracts. So it's actually a deflationary asset when demand is high. So over the last 2 years, Ethereum's token supply has been decreasing. Again, that's an extremely strong valuation metric for why it would accrue value, because everyone needs this token to use the chain. And if it's going down in supply, naturally there's a supply shock over time. So yeah. And then Hyperliquid, I think this is probably my favorite one to talk about. This is one we actually covered off at $7 in our community, and I believe about $13 in Dave's community in MTM. It currently trades at about $40, despite the fact that every other asset in crypto is significantly down. This one is doing extremely well. And the reason behind this is because it is an extremely strong revenue engine, and it distributes 99% of its revenue back to the token holders. So how it does so is it buys the tokens, it burns it out of supply. So it technically creates demand for its own token and then removes it from circulation. So naturally making it more scarce. So the more people use this, the better the metrics and the valuation for Hyperliquid is. So this is another one really strong asset.
Absolutely. Yeah, I think everyone maybe watching or that's a client of UpTrade or maybe in the MTM community knows that we've been speaking about Hyperliquid for months, about its value, its the ability to trade 24/7. You know, it's actually now becoming linked to the commodities market, being able to trade gold, silver, and oil 24/7. So when the invasion broke out between the US and Iran, and it was on over a weekend, traditional markets were closed, and people were finding ways to trade and buy gold, silver, and oil, and so they all went and flocked to Hyperliquid, and then we saw a huge spike in volume, and we said, well, there's something here that's going on. There's definitely some interest in this product. So it is, yeah, shaping up to be a behemoth in that world. Binance tried to compete. It launched Asta. There's a lot of speculation around what they were doing there. I can't really comment whether it was real volume or artificial volume, but there's a lot of platforms and exchanges now trying to compete with Hyperliquid. You got Bybit. I think they launched a perpetual decentralized exchange to try to capture some of the volume, but it's just becoming a behemoth from my experience and speaking with people.
Yeah, perfect. So quickly moving on, Layer Zero is one that has recently kind of shed more confidence, will come to light, and it has brought more confidence in my eyes in this project, which is more or less is a cross-chain messaging platform. So what that basically means is you've got a chain like Ethereum and you've got a chain like Solana. These are two very different chains. They don't have any interoperability, so they can't actually connect with each other. However, Layer Zero has built a new foundation for these types of chains so that they can actually message between each other. So assets can be transferred from one chain to another, despite the fact that they don't have any real connection. So this has become the connection between most chains globally. And what they've actually done is, 100% of the revenue they make from these bridges and fees are used to buy back their tokens. So this is exactly what I mean from a utility point of view. When you have real cash flow and you're using it in a way that is benefiting the token, there's a real understanding of why the token can actually accrue value. Whereas if you don't have that, you naturally won't have the ability to sustain the life cycle of your token. Another really good example here is Aerodrome Finance. This one is like the dominant decentralized exchange on Base, currently riding the Coinbase Layer 2 tailwind. They've done extremely well. Again, 100% of their revenue going to the token. This probably sounds like a really common thing, but not many tokens really out there will do this. I think maybe 0.001% are actually using revenue to give back to the community, which is a very strong mechanism. And just quickly on this one, we covered this back at about 28 cents. Last year, it ran up to $2. It's back around 33 cents. And in my belief, I think the fundamentals are even stronger than they were a year ago. So that just goes to show what Dave was talking about, where this is a great time to be paying attention to these types of assets because the market's down, they're building, and there's still a lot of opportunity to kind of capture. And then we'll move on to the last one because I'm cautious of time here. And the last one I just wanted to cover off was pump.fun. This was the launch pad I was talking to you guys about earlier, which is basically where all the meme coins have been created. And this one has done extremely well in terms of revenue. They have been able to generate over $1 million a day, and that's about $365 million a year just in revenue from launching tokens. They use that to buy back and burn the tokens similar to Hyperliquid. And more or less, this is like the house of a casino. So instead of actually buying one meme coin, a lot of people are now looking at this, and a lot of funds, I can tell you that a lot of funds have been focusing on every single token I just spoke about because naturally I have had the experience to work with a lot of them and I do have strong relationships with them. This one is also one that they've been paying attention to because this is what captures a lot of retail's interest when it comes to meme coins. But this is a one way to get exposure without actually having to buy or have singular exposure to one certain meme coin. So again, this one is doing extremely well in just sustaining the life of the token through revenue despite the actual market being so negative.
So normally, guys, to give some context there, you would need to maybe be a sophisticated investor to access, institutional asset managers in crypto that do this type of research behind the scenes. So we're effectively providing the same caliber of information to you at your fingertips here today that some of the biggest funds in the world would use to do their own crypto research. So it's great to have these insights here, Kane. And the way I see it, before we jump to Dave and let him make some magic there, the way I see it is like it's like the letter that Jeff Bezos sent to Amazon. During the '02 recession when their stock was down 90+%, and he said, "Well, hold on, our stock is down, but our book sales are through the roof, and all of our metrics are through the roof. Retention, reorders, acquisition, it just looked perfect." And he said, "This isn't really adding up." And then those obviously that looked underneath the hood of the car and saw how strong the company was, despite the market perception of the asset, which is, as you know, price is just the reflection of human emotion, effectively. And this is what we're trying to do here. We're trying to give this, what's the strongest engine here powering crypto at the moment. So if the conditions do improve coming into the next few months, you'll be, again, the narrative today ahead of the trend or finding quality before it trends. So just wanted to summarize the last few slides and then hand the keys over to Dave.
Legend. Thanks, George. So before I move on to this, guys, I just want to give you a little bit of background just so you can get into like my thought process. So as I mentioned, I just came from the gold conference just before, and everyone's talking about why gold so bullish, silver, things like that. And also, there's all of these stores there as well, and they're all mining companies. Okay, they're explorers or developers, people that are exploring and going gold. And why should you invest in our company? Okay, so obviously, it's very much like buying an altcoin to Bitcoin. Is why would you invest in a mining company? Because of the upside. You're hoping to get that big win, that 50, 100x kind of thing that you can't get on gold. And what I talked about with the guys there is like, what you've got to realize is most of these mining companies, they sell you a narrative. They sell you a lifestyle, like they're lifestyle companies. They find the gold, but they never actually end up normally turning it into something. And that's over 90% of those miners. So what I talked about is if you're going to take on more risk, because a lot of these miners go to zero, you must get more rewards. So what you should be doing is putting those miners against the benchmark, which is gold. If they're not outperforming gold, then why are you taking more risk? So with that same mindset, that's what we also need to do within the crypto market is Bitcoin is the benchmark. Bitcoin will be here in 10, 15, 20 years, whereas a lot of these altcoins won't. Okay. And again, this isn't just my opinion. This is data. So what I'll do is I'll show you guys the historical snapshot of CoinMarketCap. So let me just pull and I'll share my screen. You guys can see that okay? So this is, anyone can do this. This is, if you go to CoinMarketCap, you can go into your historical data snapshot. So you can actually go back and look at what altcoins performed well during different periods throughout. So as you can see, 2013, if we go back to there, look at these beautiful altcoins, Peercoin, Feathercoin, Freycoin, Terracoin. Which one of these still exists today? Only Litecoin is the only one, and it's not even in the top 10. So all of them went to pretty much zero besides Bitcoin. Okay, all right. Let's go a couple of years later. Let's go 2015. Same thing, beginning of 2015. What do we have here? And what you'll find is over the last 10 years, there's only 3 coins that are still in the top 10 today that have been there the whole time. One of them is going to shock you too. So Bitcoin, XRP, still there. Litecoin there, but not top 10 anymore. BitShares gone, Paycoin, Stellar, not top 10, but still there. Dogecoin, MadeSafe, Next, Dash, like look at all these ones. They no longer exist, or they don't exist very well. Bitcoin, nowhere near a top 20 company anymore. All these ones, look at them. Okay, so majority of the altcoins, again, go to zero. All right, let's go 2017. Again, Bitcoin's always there. Ethereum, XRP. All right, these are the two. Ethereum and XRP are the ones that have always consistently been in the top 10. All right, they at the moment are very safe bets. So at the moment, Bitcoin, Ethereum, XRP are the 3 that have always been in the top 10 throughout the last 10 years. And the other one that seems to sneak its way in there, and I don't know how, because I don't know what the fundamentals are like, guys, you have to figure it, is Dogecoin. It always seems to find its way back into that top 10 throughout the last 10 years. But again, look at these top 10. Ethereum Classic, not there. Dash, MadeSafe, NEM, Enga, Steam. These were all huge projects at the time that no longer exist. Okay, so if you're going to take on that risk, history tells us that most of them aren't going to be around again later on. 2019, same thing. We've got our Bitcoin, XRP, Ethereum, EOS. Remember that was the Ethereum killer. No longer there. Bitcoin Cash, Litecoin, no longer top 10. Tron still hanging around. Bitcoin SV, Cardano still hanging around. But you'll see Neo, the Chinese Ethereum killer. You get these narratives, you get these things. And this is why it's really important to follow the data, not follow those narratives, because as you can see, most altcoins that were the big dogs were the ones, they're actually not there anymore, just like a lot of these mining companies as well. Okay, so I just wanted to show you that, because now you're going to get inside my head. And what I'm about to show you is probably pretty important, because you actually see with data what it is I'm talking about. So DOT, was one of the top 10 projects for a long time. This is DOT against Bitcoin. Can you see how it's just been in a massive downtrend against it the whole time? So it's not beating the benchmark. So why would you be there? Okay. This is what 99% of altcoins look like right now. And how I know these boys are so good at their job, the coins they've asked me to look at, they're the 1% of coins that are actually doing the opposite right now. And that's how I know they're good at their job, because they've unpacked the fundamentals and the charts and the data is actually backing it up. And there aren't many coins that do that. And I'll show you. That's DOT. Let's look at like another old top 10 one, EOS, the Ethereum killer, EOS Bitcoin. See, massive downtrend against Bitcoin. Neo against it. Okay, massive downtrend against Bitcoin. And the one George mentioned before about that lady that made a fortune on Theta USDT against Bitcoin. You can see when you wanted to be in it, which is when she would have been in when she made that fortune. But if you look since 2021, it's been in a massive downtrend against Bitcoin. It hasn't been performing against the benchmark. All right. And this is what majority of coins look like right now. So now when I go through these projects, you're going to see why these ones are special, because that's what most look like. All right. So now let's look at the first one they talked about, which is right now Hype. So as mentioned, $40. This is weekly chart. It's in bullish uptrend right now. Fantastic. Only down, the high was 60. So only down about 30% from the high. But the main chart I want to show you is the Bitcoin chart. Look at the difference between this chart and those other ones I showed you. All those other ones were in massive downtrends against Bitcoin. What's this doing? It's in an uptrend. Okay. And like I told you, there aren't many. There's less than 1% right now that are doing this. So that's showing massive relative strength. That's showing massive strength against the benchmark. And like George talked about with Amazon, if you go back to the tech bubble, most people were looking for those companies that were down 99.9% thinking, oh man, if this goes back to the high, I'm going to be rich. Most of them went to zero. What you should have been looking at is the ones that were showing strength, the ones that were only down 30, 50, 60%, which was your Apple, Microsoft, Amazon, etc. Because you got to wonder, well, why aren't they crashing like the rest of them? Because there's fundamentals behind them. And then during the next bull cycle, what did you get? Massive outperformance. And that's where you made that life-changing wealth. So the fact that Hype's only down 30% when Bitcoin itself is down over 50%, massive divergence, massive strength, and something that should pique your interest. And they're telling you that the fundamental story, the technicals are backing it up as well. So yeah, right now, massive strength, fantastic. Yes, it's had a bit of a run and you might get a healthy pullback, but the main thing I'm interested in is it outperform the benchmark? And it is. So massive green tick for me for Hype. There aren't many that are doing that. Next one, Zero. This is one that you can see here. Again, not too bad. Like it's down, $7 down to $2. Still showing there's a lot more that are down, a lot more than that. Obviously not as strong as Hype, but again, it's not the same size market cap. It's come down right now and it's actually showing a little bit of a level of accumulation right now. So what I'm seeing here is this. So we've had the downtrend. We've had the massive capitulation low here. You've had this buying here, and now they're buying higher. They're starting to come up. So if this can get through this $2.32, kind of get a weekly close above 240, I'd be quite excited about this one. So like that, again, not a massive downtrend, has started to form an accumulation base. It's actually in an uptrend. You can see higher high, higher low now coming up. So again, there aren't many coins that are doing that on the weekly right now. And again, if you look at that Bitcoin pairing, what's it doing as well? Okay, it was in a downtrend against it, but you can see since all of this year, it's been outperforming Bitcoin. So why? Again, showing massive strength. So again, there aren't many coins that are doing that. So showing relative strength. Morpho, same thing. The high was up at close to $3. We're down at $1.60. So it's pretty much on par with Bitcoin. Again, there aren't many coins that are only down 50%. Most are down 90, 95. You've had, again, a nice push up right now. You're getting a bit of a healthy retracement right now. but again, showing some strength. If we put it against the Bitcoin pairing, again, look at the difference. Showing massive outperformance. So what I'd be looking for is, this is your old sellers here. I'd be looking for this to come back to this area, get these buys back in, and have this resistance support flip area here. So yeah, has had a nice massive run, getting a nice healthy consolidation. But how many altcoins can you see that are doing that, showing outperformance against Bitcoin on the weekly time frame? Okay, so I wanted to show you the other ones first, because you're just going to think that they all look like this. They don't. You could, so many altcoins are literally going left to right like that. So the fact that these are showing strength means that they're doing something special, which is, like I said, which is why these guys are shows you that they're good at their job. So that's the three there that they were talking about. Aero is one that that Kane mentioned as well, is one to keep an eye on. You can see, again, not making new lows. You're down at this major support here, showing a little bit of life right now. But if we put it again, that's the Bitcoin pairing. Okay, so again, it's not making new lows against Bitcoin pairing. It's down on a major support right now. If that can get up through this area here, that would really excite me. But let's just go to the, because you guys want to know the dollar amounts, AERO USDT. Again, you can see this is down in this major support as well. So look to see if these buyers could come in here, and Kane could be right. But again, it's showing a little bit of strength, not as strong as the other ones, but it might start to come in on the way. I'm going to just put one wild card in there, guys. George, you didn't know if we were going to talk about this one, but it's one that we saw on the technicals on the charts a few weeks ago. And I'd love to know if you guys like the fundamentals on it as well. And it's Teo. So Teo changed bullish market structure back here on the 11th of March, and we went long on it there, because you can see the downtrend move back to an uptrend. That's the USDT pair. But if you also look at the Bitcoin pair, same thing. So at the moment, Teo is showing massive outperformance. And again, if you zoom out to the weekly time frame, you can see the same thing, that look, it's starting to break out against Bitcoin. So you've got your nice accumulation level here, and it's just done the breakout now. So this is one that was brought to my attention. I was like, wow, this is looking good. We're getting a breakout on both the USDT pair and the Bitcoin pair, which means it's outperforming the benchmark, which means it's worth the risk, which means it should outperform and go there. So yeah, is that one that you guys have had on your radar as well for FA?
Well, but me personally, I've actually known about Tao since maybe 2, 3 years ago at around $10 when it wasn't even on an exchange. It was on a platform called Tensor.exchange. I can't even remember how long ago. So it's come a long way. It has been on our radar, Tao, but in terms of its metrics, it's very unique, and it's the way we see it as is like the Ethereum of AI. It's the leader of decentralized AI infrastructure. And the way that its subnets work, or think of it as like startups within the Tao ecosystem, really you need to monitor each and every single one and how much activity they're driving through their. It's actually quite hard to see the value of Tao and underneath the hood because of the way it's structured. But Kane, did you have any comments around maybe increases?
Yeah, for sure. I mean, like for most of our clients, from an AI point of view in their portfolio, they all hold Tau. It's one of my favorite AI tokens by far. I think from not only a fundamental point of view, like the tokenomics are really interesting as well, because what they do is they actually mirror the same tokenomics as Bitcoin. So there's only 21 million tokens. They only just had their first halving, which was in December of 2025. So a halving similar to Bitcoin's is the amount of emissions that are occurring. So the rewards to the miners, they get slashed in half. So that happened with Tau, and it's really interesting because that was almost a bottoming signal on Tau when that first happened in December, and since then it's had a pretty nice run up. So it's mirroring a lot of the same stories and the success that the halving of Bitcoin had.
Interesting. Yeah, so it was just one that brought me. I was like, technicals look good. I can't argue with it. So yeah,
Beautiful. Was that everything that you wanted to cover off for now,
yeah,
Dave?
that's the three of the coins, and yeah, I just really wanted to emphasize that that's not normal. Those altcoins, like majority, as I showed you, aren't doing that. So that just shows you they're showing massive strength in a bear market right now, and they're the ones that you want to be in when the market does turn around. Okay, so it's doing the work now during these times and going, well, what are the ones that are showing relative strength during the bad times? Because when the good times do come around, they're the ones that absolutely skyrocket. They're the ones that really outperform and shine during that period.
Absolutely. That's awesome. So really we're just over the hour and I wanted to also have an open forum for questions. I'm just going to bring up my screen just to give everyone an opportunity to ask any questions about the altcoin masterclass. I know there was one there from Helen De Silva. She said, maybe this is more applicable to technical analysis, Dave. So, do we apply TAs such as Elliott waves and fib retracements against these comparison charts to determine trends in entry and exit points? I think in reference to altcoins, perhaps, Dave.
Yeah, definitely. So everything you do on the USDT pair, you can do on the Bitcoin pair as well. And you want to get that confluence from both. So I'll only ever enter an altcoin if I get a buy signal on both pairs. So never ever do I enter an altcoin unless I've got a bullish signal on both the Bitcoin pair and the USDT pair. 100%.
Beautiful. Another question from Derek. What were the three coins? My audio got cut off.
So they were hyperliquid, zero, which is HYPE, zero layer, which is ZRO, and Morpho, MORPHO. And then the little other potential ones that we liked were Aero, AERO, and then I threw in the little gem at the end, TAO, TAO. They were all performing against Bitcoin.
Beautiful. Another question from Barry. I'm imagining maybe you quickly look at this, Dave, but what does the XRP Bitcoin chart look like?
Mm.
XRP is heavily on our radar. They're making a lot of headwinds in the acquisition space. In 2025, they acquired like $3 billion worth of companies. They've now got licensing in Australia. So it'll be interesting to see how that's shaping up. If you had a
Yeah, definitely. I will just share my screen quickly.
Sure.
So this is where it is right now. So at the moment, it's been in this kind of sideways consolidation against Bitcoin here. So a lot of people were really frustrated with XRP on the last cycle, like the 2021 cycle, because everything went up. And if you were all in XRP, it went up, but nowhere near as much as those other ones. And you can see from that, 2017, it was actually in a downtrend against Bitcoin throughout that whole cycle. And that's why if you were frustrated, XRP didn't even outperform Bitcoin in that cycle. Okay. However, during that period now, we've been in this massive consolidation. XRP will go absolutely ballistic when it gets above that ratio there because you've been in a sideways consolidation for 6 years. So I believe this is a strong accumulation. And if it ever gets back down to this level here, that's your buying opportunity. This is your historical support where you can see XRP has always been a great buying opportunity. That's when I went really bullish on it back at, I think it was 40 or 60 cents. It was back down here. Sorry, here. And it shot up, found its resistance. And yeah, it's still, you're looking for it here just to have a nice, healthy retracement. So from here, coming back down, and you'd be looking for these buys to step up anywhere in this box right here. And if they do, and they come down here and that you ever break through that level, that's where all the XRP army is going to be having a party of a lifetime.
I'll be there with my champagne.
Yeah.
So somebody
Awesome.
asked, no, great session, no mention of Richard Hart, no longer showing strength. That's correct. I guess the Richard Hart ecosystem has kind of fallen outside of our analysts' qualification criteria or key criteria that we look at. It hasn't really come up on our radar in the current cycle. Helen also asked, do you have a short-term, medium, and long-term portfolio for any alts in the same way you might have for conventional stocks and ETFs? So we currently have a pending application with ASIC for an Australian financial services licensing. This is the first of its kind for crypto, where we're going to have more products come to life, which may look like something in that structure. But for now, crypto is so nuanced that really altcoins don't really operate as like a long-term, short-term. It's a cyclical event typically from what we find. So it's a lot more nuanced. So we typically focus on really good research analysis, portfolio building, as opposed to kind of like a basket or an ETF product. Somebody asked hopefully that answers the question also.
Yeah, before there's just a couple questions in the chat around Canton Network. So I thought maybe I'll just quickly touch on it because people are asking if it can be considered a winner, if yeah, more or less if it kind of matches up with the narrative and metric identification. So basically, funnily enough, we should have a research report on Canton being released at UpTrade Alpha, but also we were going to post it in the MTM community. So you guys will have a good little read on Canton Network, which is basically a blockchain built specifically for institutional finance, and hence why it's been doing extremely well. It offers privacy by default and compliance frameworks that public chains like Ethereum don't currently have. So we've seen already big major institutions like JP Morgan already live utilizing this blockchain, sending billions of dollars in transactions. So and they're using that to also burn their tokens. So there's a really strong revenue engine behind that and a value accrual model that they've got in sync. So yeah, look out for a Canton report coming your way soon.
Yeah, Canton's definitely a hot topic at the moment. It's in a lot of communities. It's probably a really popular traded asset at UpTrade now. So yeah, great that you asked that question, Dan. Definitely trending at the moment. And you got
Yeah,
Dave.
showing strength. Yeah, so yeah, you can see why it's definitely showing strength at the moment. Just having at the moment zigzag, just having a healthy pullback at the moment. Yeah.
Absolutely. Brian Peter also asked, and probably we're going to maybe capture a couple more questions, and then we'll wrap up from there. But in terms of being forward looking for the rest of 2026, could ETH begin to outperform Bitcoin in the short term? I.e., does Bitcoin not hit an all-time high in the next 12 months, but Ethereum does? That's a great question, Brian. We would need to, I think Dave's going to answer that shortly.
Yeah, so you can see that period there from June 2025 until August is where it really outperformed. That's when you had that massive run up. You've been in a downtrend since. Hoping this is a nice little accumulation. So you can see you've got a very clear downtrend right here at the moment. So every time it keeps getting rejected. So what we want to see it do is, bounce off here and shape up through there. And if you can get up through, so you got all this major support now. So this is where all the buyers have been coming in. And you can see they're selling right now. So if we can get up and break up through there, that will be very, very, and that's where you'll get that outperformance. Because you've come down, nice little accumulation, break up, old sellers support, and get up through here. So possibly I'd be looking around, sometime in the next, first week in April, and see if you start breaking up and getting up through there. So let's just have a look at Ethereum on the Binance against USDT. Yeah, you're just looking for it to kind of get up through here. We need to, get up through some key correction zones, really. I'd really want to see it get up through that 2,800, because you can see that there lines up with all this level. That's going to be a huge level to get through. So yeah, if it ever gets through that 2,750, 2,800, then you're going to get that outperformance then for sure.
Absolutely. We're looking forward to it. There's a lot of rumors and speculation around Bitcoin dominance being quite weak, but whether that means that we do get that altcoin season is still yet to be determined. We need a lot more liquidity back in the system. We need the Federal Reserve to start cutting interest rates and stimulating the economy there. And that's what we saw in 2021 for the huge run in alts. But looks like we've just hit an hour and 20 or close to. I'm just going to wrap up there and pretty much just say, look, for today, if you have got anything out of today and this session. Like, do not let it stop there. You're masking the markets. I remember maybe a few years ago, it was just an initial idea, and now it's grown to be one of the fastest, investing communities across all asset classes in Australia. They're the most trusted that I know of. They got an April intake for their education and courses. That's almost full. It's closing as well pretty soon. So make sure you grab a spot before you do miss out on that if you are interested. And when you are ready to start investing through a broker for cryptocurrency, and you want to sort of professionalize the research and the analysis there, sort of UpTrade can have you covered. What I'll do is I'll just put through a link in the chat for those that may be interested. And yeah, we look forward to sort of to welcoming you and guiding in your journeys. If that's everything, thank you, Dave. Thanks, Kane, for your amazing time. And yeah, that was a really valuable session. I'm hoping everyone found that valuable.
Yeah, thanks, guys. Pleasure as always. Awesome. All right, take care, everyone, and we will catch you on the next one.
Take care.
Bye, everyone.
Bye.